Hi, everybody. This is Steve Chen. I'm going to record this so that you will be able to watch it at your leisure. Just briefly or quickly review what I have taught you in the past about the trading. This is what we call Start Trade 101. Actually, you can say Option Trading 101. So remember, you want to stick with the idea you want to have small gains, big gains, and small loss. You definitely want to avoid big loss, okay? And also you be ready to lose money. But so if you actually have a good principle that you're not going to lose big money, then with the first three approach, you will end up with a winner. Later on will be more obvious for you. Why do I say that? So you need to have a very good standard operation procedure called SOP, which means the rule you are going to follow religiously so that you can get a consistent results. So with that basic in mind, then you want to pick good stock to own, and then you need to know, which means that you need to know what to buy, and you need to know when to buy and when to sell. This means that when to sell for profit or when the market goes against your way, then you will use stop loss, so to avoid a big loss, okay? Therefore, with this approach, you will be able to get small gains, big gains, and small loss, but you will avoid big loss so that you can stay as the winner. Then a little bit about fundamental analysis idea will help you. About the fundamental analysis, there are so many good professionals that are doing the fundamental analysis, and they more than likely the professional trader or the company institution, they will have a lot more information than you have. So the fundamental analysis, usually you will not be able to compete with them. So that's why I actually stick more with the technical analysis, because actually technical analysis, especially the one I'm using mainly, is the candlestick chart analysis. If you're following me for some time, you will know the candlestick chart pretty much actually is analyze the trading action. So that's the price action. Then how do you get the price action is the end result of what happened in the market trading. Therefore, that whatever people trade based on their fundamental analysis, they make the decision to buy and sell. You will end up to show the chart, and then the chart will allow you to technically analyze it. Therefore, especially for me, choose to believe in the technical analysis. In my mind, actually, technical analysis is also address some, not all, of the effect of the fundamental analysis. If it is not obvious to you, please follow me more at my group or Facebook presentation, or join this meeting more often and ask your question. I hope that will become clear to you. Okay, so this is the basic principle. I wish you will be, or I should not say I wish, I think you should actually memorize by heart if you want to follow my approach. Then let's talk about the practical approach. Then, of course, let's review that again. Buy good stock. Once you own it, you can sell cover call to increase income. This is when, again, I explained in the past, and I will spend time along the line to explain to you how to do this. Then if you are approved to sell naked puts, then you can actually sell puts to get better deal with the stock you want to own, or you want to take advantage of the downtrend of the stock. This also takes a little bit more explanation. I have done that several times before, but I will keep repeating it. If anybody need to have additional explanation, I will do it. And in fact, most of this concept, if you Google it, especially in the YouTube, there are plenty of video to help you to understand. Although this do bring up a point that you need to start to develop ability to identify who is able to present with you with good information. That's very important. Put it different way, that you need to be able to pick the right mentor to follow. So this is a general principle. And if you have been following the market, you will know this couple of days actually become very, this couple of days a very crucial point of as for a trader. Why do I say that? Unless you are totally ignoring the news, you should already heard about the Virginia Charlottesville, the riot, and then how President Trump responded to it, and all this actually create a havoc of the market. So to show this point, I'm going to show you the S&P 500 index. Since this is a daily chart starting from August last year to now. So now you can see what I mean, okay? Until this day, which is like August 10th, market has pretty nicely uptrend. They may go sideways, then they up sideways a little bit, then go sideways, then go higher. Then this one seems to give somebody a little bit scared and go lower, but then resume higher. So essentially, until this time, almost every time you see a dip, you buy, you're going to gain. Imagine that you buy from here, and then you just each time have a dip, you buy, and you buy, and you buy, you buy, you buy, you buy. You make a lot of money, okay? Because let's say you actually start from, let's say you start from this point, it's 2100. Now, when it's highest, let's say you did not catch the high, let's say it's 2400. So that is 300 points of S&P. That's a lot, okay? But now you must have noticed that what happened here. So I'll use this as example to tell you the general idea how to deal with the market. I want to bring up a point. I think anybody actually know a little bit about technical analysis will know that there are all kinds of parameters people are looking for. Following, okay, other than here. Let's start out from here, all these lines, okay. These are moving average. So this is 50-day moving average, the red one. The green is 20-day moving average. Then this one, the bright blue, or it's called turquoise, is the 9-day exponential moving average. Then there's a 3-day exponential moving average. Why do I use simple moving average for the 20 and the 50? Then here, 9 and 3, I use exponential. That's not a subject today. If you actually follow me enough, you will know that. And also you go to my line group. I actually put some in the note portion. You can go there and find some definition and how to use those. But the point here is that, say, this is one thing people actually could maybe following the moving average. Imagine if you look at here, you say, if I'm going to trade, it's a simple approach. I'm going to trade against 15-day moving average. So each time it moving close to 50-day moving average, I buy it. Then it moves away from the 50-day moving average is fine, and actually you can take some profit and wait for it to touch the 50 again and again and again. This couple of times may scare you out, but when it's moved back up, you buy it. So it's still doing fine. The question is what happened here. Okay, so that's one way to do it. So some people do 20-day moving average. Then more detail is actually today is not a focus on that. It's using the 9 and 3 exponential moving average. When the 3-day moving average above 9 moving average, that's exponential, you stay long. When it's lower, you get out or become short. That's too detailed. Actually, I don't intend to go there. And the other way is looking at the support. What I want to show is, if you can see here, look like here, this is going pretty fast, going higher here, but here there's a trading range, and there's another trading range, there's another trading range. So once you get practice a little enough, this will become obvious to you. So you can see the trading range. You look at the trading range. Essentially, other than this one actually pull back a little bit more, essentially each trading range except this one is moving above the previous one. Therefore, this tells you this is uptrend market. So based on, if you trade based on this moving average, the trading range, it will help you too. So the question is that, what are you going to do when this happens here? So this is very crucial here. So one reason, of course, from here to here, almost 200, let's make it rounded, let's call it 2,500, and let's make it rounded is 2,000, then that's 500 point. 500 point for the S&P is pretty high. So why do you keep seeing the sideways moving? That's exactly what happened. When you have this nice going higher, in case you don't know yet, this quick going higher, this shoot up, is because after Trump get elected, people call that Trump rally. So the Trump rally go pretty fast. So people was pretty happy, keep buying it. Then once the beginning of this year, people start to have this a little bit afraid of height. Say maybe we reach the point, market will turn. Therefore, there is a struggle in here. There's when you have a bull and bear fighting against each other, then you have the trading range. The trading range usually help the market to decide whether you want to go down or go up. So apparently it end up to decide to go higher. So once it go higher here, if my memory serves, this is the time actually Trump come out and say he will have this new policy, new regulation come out will be so powerful to help the economy. So people get excited again. So it's had almost straight up. Okay. So also now let me introduce you an idea. It's called, this range we call balance area, meaning the market is trying to find the footing. And when the footing is decided and it decides to go higher, this is called vertical phase. Vertical phase, then you reach the next one, the market is searching for the balance. So this is another balance one. So when this one is educational, since you already see this, so to make this clear, so let me expand this, so make it easier to see, okay? So when this here, now I don't remember what happened here. Must have something pretty happy. So it has opened up, actually has a jump out of the trading range. But right after that, there is a very big selling one. The selling one is pretty much covered the buying. So this actually, some technical analysis will call this dark cloud. So that actually will trigger some people to sell. So that actually moved it back down to this trading range. So they struggle with a little bit. Then the market decided to use this region to search for the balance area, to search it. Then this one, it ended up to be something probably, I don't recall what happened. There probably some other reason to cause this to scare. So if you actually see, I hope you can see this is a pretty big red candlestick. Now I'm going to call just K bar. It's easier for me to say. This K bar is pretty big, so this is selling. So as soon as this is selling, then the next day market, the next few days, the market decide to use this range to do the trading range, to search for this, what is want to do. So now, after from this March 21st to almost exactly a month later, there must be some good news come out. So you just take it out of the trading range. And then you start to use this one as a trading range for some time and go to May 11th. And this is not exact, actually. If I really want to do this, I can expand this a little bit. Okay, then let's expand this to make it clear to you. Okay, now when we expand this, you can see that now this is trading range. Then did manage to get out of this range. Okay, now we reach July 14. So the July 14, you get another kind of vertical phase. Then it go to the next phase. That's July 18th to now, to August 8th, using this range. So with that experience in the past, you should start to understand the market will use this to decide whether it want to go higher and lower. Then have this image in your head. This chart means bull and bear. If this, let's say, if this particular one, this means bull is winning because the K bar is open. The inside is open. So so meaning that this is open, this is closed. And again, you can go to my site, or I will offer more to there's a very basic to explain what K bar means. Today's focus is teach you how to identify the trend. So I'm not going to spend too much time to explain the detail of each K bar. But however, this tells you that this is pretty bullish. Then it actually, each one, imagine that for each one trade, somebody wants to sell, somebody has to buy. So this means that the bull is winning. So whenever you buy, sell it, somebody is willing to pay higher price to buy. When you have this one, it's just contrary. Whenever you try to buy, sell higher, nobody want to buy. People just keep selling. It's actually go all the way down here. So you have this trading range like here. Then now you have this one. Then you have this one. And this is the area we start to have the North Korea confrontation. And then Trump says about this fire and fury and get markets scared. Then this is the day I think he doubled down his threat. So really scared the market. So it's got very big selling. So this also tells you that if you actually go back, if we make this smaller, you can see from here until here, you have not seen such a big red bar here. So the nature of the market is changing. You have to be careful. Also, this is 50-day moving average. 50-day moving average, there's many, many traders are looking at. So when it breaks 50-day moving average, it actually will trigger scare of selling. But so if you, from a technical analysis point of view, you will say, this is worrisome, you should sell something. In fact, the disclaimer for me, this is the day I also sell one position of mine, take about, I would say, 1,500 loss, because I decided to say, if this going even less, even lower, then I will minimize my loss a little bit at least. Then interestingly, over the weekend, it turns out that there is behind the scenes negotiation, according to my reading, of America in the mainland China and also the Trumps, the double downs, the threat actually become effective. So China and also, I believe that's what is read. I actually have no true exact information, so I cannot claim I know everything. But according to what I read, is actually that caused North Korea to back down. They say, yes, they have the plan ready to attack Guam, but he's holding it off. So as soon as that news come out, in 2 days, the market take care of this big selling. So this become a little bit promising here, okay? So actually, just by these 2 days, again, a little bit personal information. This particular day, at this range, I actually was making my all-time high gain this year. But with these 2 days, especially this day alone, I gave back about 20,000 of my gains. But when this come back up to here, I recover about 1,200K. So actually, I'm looking at losing 8,000. Actually, I think I recover more, like 15K as the next day going higher and higher. But you know that over the weekend, because of the new crisis coming, because the response of Trump to the riot at Virginia, it's called Charlottesville, scared the whole group of the people who supposedly to be helping him. All those CEOs start to leave his group, and he actually has to disband the group. So now the whole market actually is afraid Trump is not going to be an effective leader. Therefore, today have this big selling now. Okay, so I think I spent about 22 minutes to explain this kind of pretty complicated subject, but I hope you can understand something. If you don't understand the first time, I hope you will watch my video several times so that start to make sense to you. However, my message to you is, look at this. These two big K-bar. One of these K-bar is already covered the whole trading range here, and several times, almost twice as big as this. This tells you the market is really jitter, okay? So how do you handle this? I have talked about that in my group discussion. Here is the key. Let me type this then. Type this. A very important thing. It's called managing your market exposure level. Let me make this very big. Oops, sorry about that. Undo. Oh, I lost it. Redo. Okay, let's do it again. How about I do this here? Sorry about this. Okay. Managing your market exposure level. Let's make it big. and make it red. What do I mean by this? This means that let's say you actually have $200,000 for your trading. Then in any given time, you should have clear idea how much you are willing to use, what portion of this amount of money you are going to use for the long position. Because imagine that if you put all 200 in there, if the market going higher, you'll make a lot more. But if market go lower, you're going to lose a lot. So if you only allow it putting half in there, then your gain and loss will be smaller. So how do you decide this? What I learned is a simple rule is that you ask yourself when the market going, because I think anybody get involved in trade, you probably already, I think unless very few exception people, most people will get very excited and just keep checking their value of the market, the portfolio. So you actually will get an idea how much is the paper gain today, how much is the paper loss today. So you can use that number, the paper gain and loss, as the guidelines to help you to determine. If you actually look at that fluctuation, if you feel that fluctuation number actually comfortable with that, you can sleep nice in the night. That meaning that you are in a pretty reasonable level. Then you can start to see how it goes, because as you use that as your comfort level, then if you can start to see maybe to choose to increase your exposure level, because maybe you're seeing your gain, such as when you are, let's go back here. So imagine you start out from here, okay? So most of the time you're going to see you're gaining, so your confidence will become bigger. Then you will start to get, unfortunately the term they use is getting greedy. And you say, maybe I can use, let's say you start out with 50%. You use 100,000 out of your 200,000. You see you're gaining more and more. Then you say, well, maybe I'm comfortable with this. I can put another, let's say 10%. So it becomes 60%. And then you'll see you gain more, you get more excited. But when it dropped here, when you have a drop here, then you get nervous. If you get very nervous, at that point you will say, you should just sell your long to make your exposure become 50% again. Then you ask yourself a couple of days later, see, do I feel comfortable? Can you sleep in the night? If you can sleep in the night and feel comfortable, stay with 50%. And luckily enough, you know something, because just take a few days, it starts to move higher. So most of the time, you will feel comfortable. So you will stay with 50%. Then let's say it's going higher, then you probably get greedy again. You can expand that to 60%. Then even higher, let's say you get greedy, go to 70%. Okay, then you go higher here. Then when you reach this point, you get so happy. You may actually decide to add more, but I'm telling you, if you actually look at you understand a little bit more of the candlestick chart, you probably will not add more percentage of exposure. Then because I'm telling you, if you actually go the day from here to here, you will see the drop is a lot more than you are used to. Then you may start to lose sleep. So if you start to lose sleep, that's the time you need to sell your long. Once you sell your long, your exposure will become lower. Your anxiety level will decrease. The difficult part about here is that usually when people see this gain, then drop to this level, let's say suddenly you see your portfolio has, let's say 2,000 decrease a day. Then usually people are not able to decide to, even they are nervous, they are not able to take loss and get out. Not take loss, actually just sell something with less gain if you actually look, if you're starting from here. Then they wait for this to go lower. Then, but this few days they cannot sleep. Okay, then when it go higher, they get comfortable. And guess what? It go even lower, then they probably see 3,000 loss compared to here, then get even more nervous. But if you follow my rule, here you will already get out some. And then here, so your loss will become less. And then finally go through this level, you will keep going higher. Okay, so that's the general idea about managing your exposure. So if you follow my principle here, then you can adjust your level here. You probably will be a level here. Then if you actually, I bet most of the people, even including myself, getting nervous when you see this. That's why I actually decided to decrease my exposure. Again, a personal note. When I have the way I manage my stock, usually when I see when the market is going to this level, then most likely I'm making an all-time high. So when I see the all-time high, I have a tendency to just take a little bit profit. Then it will go lower. Then when I actually come to here, I will make an attempt to buy a little bit long, just to test. Because if I'm successfully going like this, actually from the gain I got from here and buy from here will increase my gain. But if it doesn't work well, it keeps going lower, then I will have a stop loss somewhere here to just decide to take small loss and to be ready for this to go lower. Okay, so this is what I do. So essentially, by doing that, I see my all-time high here, maintaining the all-time high here, and coming here, then I start to lose my money here. Okay. But by doing this, I actually already raised about 100,000 buying power, which is about equal to 50K cash. So therefore, I feel pretty comfortable at this range, and if it go lower, but I did not actually expect it to go that much low. So this day did shake me a little bit. So I decided to take that loss for about 1,000. Then quickly it's recovered. Then now it's going lower. So it's anybody's guess what will happen tomorrow. But currently with this kind of movement here, I'm ready to actually sell some more longs if tomorrow this keep going lower. Because if you go back, if I make this smaller, nobody can actually guarantee this is not a top formation, then it will change from the uptrend to become downtrend. So if it becomes a downtrend, if I don't get out from here gradually, then I will give back most of my gain I get this year. I don't intend to do that. So I'm going to do gradually. But in the back of my mind, I think more than likely this will pull back, and at certain level, it will start to move higher. But nobody can guess. So I think the only way to do this is this. Manage your market exposure level as based on the performance of index. Okay, so that's the message I'm giving to you, and I hope this is helpful to you. If you have questions, feel free to ask me in the chat or join my next week's meeting. And I also want to take this opportunity to explain some confusion maybe caused today, because we have this new member, Dr. Joseph Chen. Initially, he planned to join us, but he told me that because of all this market action, he's in Taiwan currently is trading, and the market is make him uneasy. So he need to spend more time to watch his portfolio and trade. Therefore, he's not able to join us. However, because I respect his approach, I think he must have a reason to do those, but his philosophy is slightly different from me. So you may actually see some of the posts he put on my site today. Then I request him to actually discuss that in private with me, because I do want to communicate with him so that he can more in line with my principle, and I'm open-minded to accept his suggestion. Then I will incorporate both of our ideas, then present to you. Hopefully that will provide you with even better knowledge to be a good trader. So there's no hard feeling between me and him. I am not intended to be a dictator, to say only I can say something. I just don't want some confusion for the beginner when you see different message on my site. Then you say, how should I make my decision what to follow? That basically is my idea. He's a good guy. He meant well. I'm pretty sure after my communication with him, we will come up with a little bit more uniform way of information to offer to you. And this is the end of today's presentation, and thank you for your time.